Friday, December 28th, 2018, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about why the concept or idea of Fed independence is a total myth, and why all central banks, for that matter, are not really independent. I want to talk about who they really serve and what really happened in 2008. And it's something that at the time I was telling my friends, colleagues at work, that was going to be the eventual consequence of the the events of 08, 09. And yeah, I want to talk about the markets as well, of course, this morning, see what they're doing. It is 8 a.m. London time. So before I go into the Fed, its independence or lack thereof, and one hint I'll give you, it does not serve the general public. That's just a little hint. But so yesterday was another interesting day. It seems like we've been, even I fell a bit victim to this. Yesterday I said, well, it was pension funds rebalancing their portfolio, maybe to some extent. But where did that idea of pension funds rebalancing that portfolio come from? It's probably from Wall Street, from the banks. They called reporters at Bloomberg or CNBC or Fox Business, and they started this idea. They probably met, of course, with the Treasury Secretary, the Working Group on Financial Markets, central banks. They came up with this idea, right? Oh, and they might even be rebalancing a little bit, but it gives people the idea that that's why it's happening. Someone asked me yesterday in my video, you didn't mention the Plunge protection team. Yeah, I didn't, but they're probably involved as well. And yesterday I watched the market a little bit in the afternoon, and I think we're down about 500 points at one point, maybe even more. And all of a sudden just start going up and up and up. And I have to say, that was quite blatant. Does that mean that they're going to succeed, the Plunge protection team, in getting the market back up and making new highs? I don't think so. I think unless the Fed completely changes its policy, which is something I don't think they're going to do, the stage is set to continue. The unwinding, you can't fight the Fed. They're reining in the liquidity. They're raising rates. They're unwinding their balance sheet, and that means less money in the system. So, yeah, I'm not convinced by that. They might try to maybe get the stock market unchanged for the year, but that would mean that Dow having to go up 6.39% for today and Monday, half day of Monday. It's possible, but yeah, that's what we're down on the year now, 6.39%. In December, it's down 8.68%, and that's despite the recovery we've had in the last 2 days. So not great performance for the stock markets. So it's 8:03. Gold is actually doing well this morning in terms of Federal Reserve notes. It's up 6.29 Federal Reserve notes, or dollars if you want to call it that. Technically, it's not dollars, right? Because a dollar is a fine weight of silver. I think it's 371 grains. But yeah, we're making new highs here. 1282.39 the high so far this morning. The low 1274. Silver continued to do really well after the break of that 1491 level. We're now at 1534. It's up 12 this morning, outperforming gold again. The gold silver ratio right now is around 83.50. So that's looking very good. I think the key level in this ratio is right around here. I mean, we had some spikes at 83.50 back in April this year, and also back in July last year, we spiked to around that same 83.50 level. So I would say if we're able to break even 82, 83, that would be very positive for the precious metals. A stock market, well, is it a market? Some people argue it's not a market. Well, the Dow future is down 30 points, 23,107. S&P is down 3 points, just over 0.1%, really, 2487. NASDAQ 100 future is virtually unchanged at 6284. The currencies, the dollar yen is really continuing to weaken, and that's not a good sign. I've talked about this many times about the yen carry trade, where speculators and investors borrow in yen. That means selling the yen in the FX market and receiving dollars, and then putting that money to in riskier assets. And why do they do that? Well, because the Japanese authorities are keeping rates at zero or negative. They have a policy of weakening their currency, so it's cheap to do that. But right now, that seems to be when there's trouble in the markets, speculators and investors close out those positions because, yeah, they're losing too much on their dollar investments. So they close out, they buy back the yen, and that's why the dollar is falling here, and that's not a good sign. So the dollar right now is almost testing 110. It's down over 0.5%. It's quite significant. We're at 110.36 against the yen. It is a bit confusing. If this is going down, it actually means the yen's going up. Sterling is up a little bit, 126.59, up 16 pips. Euro almost back up to 115. It's up 1/3% at 114.64. The dollar is down 0.1% against the Chinese yuan at 686. Oil up 2.5%. Crude WTI 45.87. And the other thing that shows to me that the rally in the stock market the last 2 days is a little bit of a dead cat bounce, as they say, is that the 10-year is still relatively low at 277. So maybe, you know, Wall Street is suckering in the pension funds, you know, John Doe's and Jane Smith's or Jane Doe's pension, and then, you know, suckering them in and selling on to them before the market really dumps, which is sad, but that's the way Wall Street works. If you think the Maneco 64 channel adds value to you and you'd like to contribute or help the channel, check the links below in the description. Federal Reserve independence, or all central banks for that matter. There's a lot of talk now because of what Trump has been criticizing the Fed and Jay Powell, that the Fed needs to be independent. You know, it needs to be independent of politics so they can run the economy well, keep the markets stable. Well, what did Federal Reserve independence or Bank of England independence do in 2008? It made the worst crisis ever in the history of, well, modern history. It almost collapsed the whole system. So much for independence. Some people argue, oh yeah, central bank independence maintains the purchasing power of the currency. There's even an economist, Roger Bootle, in England, and he's, you know, writing for all the major newspapers still. He wrote a book in the 90s saying the death of inflation, and he argued, oh yeah, the Bank of England independence is going to keep the pound really steady, no inflation. And, you know, 20 years later, the pound is, you know, worth a lot less. And there's huge inflation, Mr. Bootle. Maybe you should revise your book or the title of your book. But central banks are not independent. And the easiest way to prove it, in my opinion, is to show you that central banks are actually, they only exist because of legislation by the politicians, by lawmakers. So right off the bat, they're not like a free market institution that evolved from the markets. and are, politically independent. They are created by, the governments. So here's the first proof. Federal Reserve Act is an act of Congress, right? Lawmakers that created the Federal Reserve System, the central banking system of the United States, and which created the authority to issue Federal Reserve notes. Note that they say commonly known as the US dollar. Commonly, it's a, but legally, those notes are not dollars, right? As I said, because the dollar is a weight of silver and indirectly also a weight of gold. And also the Constitution says, Article 1, Section 10, no state shall enter into any treaty, alliance, or confederation, grant letters of marque and reprisal, coin money, emit bills of credit, make anything but gold and silver coin a tender in payments of debt. And the Bank of England is the same story. Yes, it's an older central bank, but it was still created by Royal Charter. July 27th, 1694. Bank of England is created by Royal Charter. There you go. The Central Bank of Brazil. I looked into that a few years ago because I was interested in knowing when it was created. And it was actually created on December 31st, 1964. And I thought that was significant. I had never looked into that. Why is that? Well, because there was a military coup engineered by the CIA earlier in 1964 in Brazil, which when the military took over up until 85 or so. And it's kind of coincidental that the central bank was created right after that coup. Maybe Brazil, the previous leader of Brazil, Goulart, the president there, did not want to create a central bank. The reason for the CIA getting rid of him was that he was a socialist, with communist leanings. Maybe that was just an excuse. Who knows? What about 2008? Well, I'll explain to you what happened in 2008. Try to do it very quickly, the big picture. And you tell me, 08, 09, let's say. And this happened not only in the US, but in the UK and all the other Western countries. Maybe not so much in Australia, but or Canada. But the gist of it was that, the banking system with the Federal Reserve, supposed to be independent, right, and run things really great, pumped up, the mortgage market, the housing market. And I guess you can blame also the people who took on those mortgages, not just the banks. So they pumped up this huge bubble. Greenspan left rates really low after the dot-com bubble for a few years. That was the start of it. Alan Greenspan, Federal Reserve. They created this huge bubble. Wall Street was allowed to speculate, create all these derivatives, credit default swaps, leverage. It was a huge casino. Everything imploded, and the system was gonna collapse totally. In the UK, they had to save RBS. Northern Rock went bust. In the US, they had to save Bear Stearns. Lehman went bust. They had to save AIG. And the system was, there was even a congressman who said that the U.S. came within minutes of martial law. And then, Hank Paulson, who's a bridge between Wall Street and the Fed and politicians. He was Treasury Secretary, ex-Goldman CEO. He begged Congress, for the TARP bailout, $700 billion. And who bought all those bonds to keep the government afloat? It was the Federal Reserve. And they kept buying it, monetizing the debt through QE. That's all it was. But the other interesting thing is those, the money for the bailout was issued on the back of the American taxpayer, because the national debt had to increase to bail out the banks, because the government created that $700 billion. They have to put it in the books as debt, and that's on the back of you, the taxpayer. And the same thing happened in the UK. So the banks got that money for nothing. They've been making billions from that money, and the money that they issued on your back, and you're having to suffer. The general public austerity, higher cost of living. You're having to pay a lot of tax to cover the interest on that debt. And that's what happened. And that's why people are angry, in France, the yellow vests. That's why they voted for Trump. And do I think Trump is going to solve anything? Right now, the way he's acting, the economics, it doesn't look like it. The debt only seems to be increasing. But maybe he's got a devious plan where he gooses up the debt so much that everything implodes. People call this 4D chess. I don't know. I'm not going to hold my breath for too long waiting for that. But so that's the gist of what happened. The public saved the banks. Yeah, because the government doesn't have any money. It's all, the 700 billion was created out of your back, and the banks got bailed out for acting irresponsibly. They should have been out of business, and they're making even more and more. They've continued to make loads of money. They haven't changed the way they act. All the derivatives, all the speculation. I have to say, a lot of people, a lot of the public got bailed out as well. I know a lot of people lost their homes, but it goes both ways. And that's the other thing I want to say. So all this financial bubble, the bubble of everything we've had in the last 10 years is also keeping a lot of people, millions of Americans and people all over Western Europe afloat. So if we're really going to solve this problem for the long term, for the general public, so that the general public isn't ripped off by the political class and the central banks, then we're going to have to see a complete implosion. And that's not going to be, how can I say, very pretty. It would be very painful. Iceland did that. They jailed the bankers after their collapse, I think in 2009 or 10. Don't remember exactly the year. But everything there is recovered. They put the bankers in jail as well. And they cleaned up the system. At one point, Icelandic banks owned almost the whole of the UK high street, all the big shops, country of 300,000 people. So they did a lot of shenanigans there too. So what about Fed independence? Well, it just goes to show that the Fed is not independent. They're created by Congress. They bailed out the banks and the politicians in 2008 and 9. How did the Fed bail them out? Well, because even though we bailed them out as well, of course, the public, but the Fed, having the power to issue these notes out of thin air, given by Congress, they were able to keep the interest rates low for the government by monetizing that debt. Because if the Fed was really independent, they would hold no treasuries or treasury bills in their balance sheet. They would hold assets like gold and silver only. By buying all those treasuries through QE, they went from 800 billion and mortgage-backed securities. They went from 800 billion before the crisis to almost 4.5 trillion just recently. That was money, credit created out of thin air. And how is that not independent? Well, because it's allowed the government to borrow money very cheaply. If the Fed hadn't intervened, the market wouldn't have taken those treasuries, or would have taken it, but at a much lower price, at much higher interest rates, and Wall Street wouldn't have done as well. With all those higher interest rates and assets falling down, you wouldn't have had the stock market bubble. So, in my opinion, the best Fed is no Fed. The best central bank is no central bank. Central bank independence is a complete fallacy, as you've just seen. not just in the at the Fed, but also the Bank of England, at the ECB, or any other central bank in the world, mainly because they're in cahoots with the politicians, you know, the bankers and the politicians. The politicians give the bankers the legal power to issue that funny, phony money, and the banks make sure the politicians get cheap loans so they can buy votes and keep the welfare warfare state going. There you go. If you enjoyed this video, hit that like button. If you're not a subscriber yet and you enjoy my videos, make sure you subscribe so you get notified of my new videos. You can follow me on Steemit, DTube, and on Twitter as well. Wish you all a great day, and I'll talk to you later. Bye.